Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We welcome now Glenn Hubbard, who has defined the growth of the Columbia Business School. He stole Abby Joseph Cohen from
Yes.
Goldman Sachs as well. But far more, he is a Republican of a different cut. You do not hear his name discussed by President Trump. Maybe that will change. Professor Hubbard, thank you so much for joining Bloomberg today.
Pleasure.
Does he need to widen the reach of his view of potential chairman? Does he need to go beyond the comfortable Trump minions and look out to Clarida, Hubbard, and others?
Look, I think the president's got reasonable names. He'll do what he's going to do. I think the show that we saw yesterday and other things are harmful for the Fed and for his own goals of getting lower interest rates. It's not obvious to me that Fed policy is too tight at the moment if you just look at a simple Taylor rule. And it is obvious to me if you continue to beat up the Fed, you risk raising inflation expectations and you risk raising term premium and long rates, and it's the long rates that count.
You are definitive on a cogent discussion of supply side. The arc theme of the Trump administration is rate cuts, tax cuts will stimulate growth. Can tax cuts stimulate growth, or is Powell boxed in by legislation?
Well, tax cuts of the right kind can stimulate growth. In the OBBBA that just passed, we did have expensing of business investment. That's a good thing, better treatment of R&D.
Right.
But we also had a big deficit finance tax cut. The best policies for growth would be changes in regulation for permitting, some housing reform, and frankly, high-skilled immigration that the administration doesn't seem that interested in.
Glenn, when you came out of Florida, and I should point out, folks, that he's the second Hubbard in the family. The other Hubbard is with the band Sawyer Brown, which is noted. Glenn, when you came out of Florida, you went to Harvard, you read Alan Meltzer cover to cover. Alan did the 2-volume Fed history. Are we at a point, like at other moments, including the seismic McChesney-Martin moment in 1951, where we risk Fed independence?
I think we are at that moment. I think a good Fed chair will block that, much as Chair Martin did. But I worry when President Trump says, I'd like lower rates because I would like to help the fiscal situation. Presidents often say they want lower rates to help the economy grow or something like that. That's standard politics. This is something different, and I worry about it.
Hey, Glenn, talk to us about just tariffs in general. How do you, when you're teaching your class at Columbia, how do you talk to them about just tariffs in general? How should they be used? How are they not used well?
Well, it's a great question. I mean, tariffs are a tax. They're not really inflationary. They're one-time changes in the price level. I wouldn't recommend them, but I don't think inflation is the biggest reason. I think the reason is you're taxing and distorting supply chains. You know, people forget two basic things. One, a tax on imports is actually a tax on exports. And the reason for that is two, one, movements in the dollar, and second, the fact that American imports are largely intermediate goods. You hurt manufacturing by doing it. The second point is it's not the current account, it's the capital account. All the current account is the mirror of the capital account. You can put all the tariffs you want on. You're not going to change the current account until you change the capital account.
For all of you nationwide, Glenn Hubbard with us of Columbia Business School, just an outstanding 2 decades there, building out the jewel of the upper West Side to Morningside Heights. Professor Hubbard, in the few minutes we have left with you, I have to go back to the Fed and look at this concept of dissent, of a younger Bank of England where Catherine Mann and others go after Governor Bailey. There was dissent a bit, Larry Meyer writing about it with Chairman Greenspan. Do we have a Fed where whatever President Trump does into 2026, that the governors and the presidents can protect the Fed by voting against a Trump chairman?
That's certainly possible. And obviously, if the chair had unwise policy decisions, I think President Trump will wind up making a good Fed choice. My concern is really the atmospherics around the Fed that really come from the president himself.
Look, Glenn, just two more questions here. I want to get one in. I know Paul wants to speak to you as well. What is the best outcome for the advisors to the president? Sitting on the couch in the Oval Office, what's the Hubbard recommendation to the Secretary of Treasury to guide the president's thinking?
Pivot to growth. I mean, the president has already said, look, I've got my OBBB done. Great. He says he'll have the tariffs done by September, Labor Day. Okay, fine. I don't agree with him, but fine. Pivot to growth. And there's a list of things you could do to get the economy growing again. It's what Secretary Bessent talks about. It's what the president talks about. How about doing it?
Right. Is Clarida on the short list? I mean, you two fought like cats and dogs at Columbia years ago, but is Richard Clarida on the short list for Glenn Hubbard?
I think Rich Clarida is a phenomenal economist. The only short list that matters is the president's.
Glenn Hubbard, that is true. Thank you so much. Greatly appreciated. He's with Columbia Business School and should be on any short list for the Fed.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
There was a revolution in 1947, which is sort of where modern statistics of economics came in, Vasily Leontief and others. Before that, there was an art to it that was decided of value. The Conference Board had a lot to do with it. And another one was Jeffrey Moore, the Economic Cycle Research Institute. Lakshman Achuthan has carried the torch forward here and releases today a jaw-dropping future inflation grade going against consensus. Discuss.
Well, as you said in the lead-in, we're doing something a little different. What we're doing is looking at the direction of movement for growth, direction of movement for inflation. On the latter point, on this inflation cycle, it's different from cycles in growth. There are very clear cycles. They're totally different. They're unique. We have future inflation gauge, which anticipates the direction of travel there. Newsflash is it's down. Okay?
Really?
Yeah. So now our job is to figure out, what does that mean? What the heck does that mean?
Is Powell behind? Does the president have an argument that Mr. Powell and the Fed is behind because of your future inflation gauge?
Well, let's say that there's not a big argument to be extra hawkish here. And so maybe for different reasons, the directional move here is to the downside. I know people are wondering why. Why listen to this indicator, right? Look, it has nailed these directional calls as far as I can remember, which is roughly to the 1990s when I started doing this. And big calls more recently would be in 21 to the downside. Very critical call was in early 24 that we were going into sticky inflation, which just messed up everybody. And here, with all the presumption that tariffs are going to bring this inflation spiral to the fore, the indicators are moving to the downside. So yeah, we had some goods inflation over the summer, but core inflation is just going to sit there and simmer for the time being. It's not running away. Services inflation is actually easing a bit here. I think the consumer, the economy just can't bear it. And so try as they may, and they will try. All the businesses are going to try. They're not going to be able to push it too hard. Consumers may ultimately pay the price here, but inflation's not going to run away.
Interesting. So, I mean, so does that suggest that, again, whoever through the supply chain, the importers, the distributors, the wholesalers, the retailers, are they kind of all in some way, shape, or form eating that margin?
Along the way, I think eventually it gets to the consumer.
Okay.
And look, at the end of the day, we all pay, right? And we are, there's no free lunch
I'm
here.
not sure we are we?
But the inflation spiral, which is, that's the bogeyman for the Fed. They're free. They're like, wait, is there some, if we have a step up in inflation, is this the beginning of many steps up? And the answer, as far as we can see with the cyclical stuff, is no. Now remember, you're talking about regime change. I'm looking at the screens. They're all regime change on some way or another. Think back to the early 70s. I want to go to old times for Tom here, okay? Think back to the early 70s.
Old times.
So Nixon comes in, he's doing all this stuff. Everybody said this is super inflationary. ultimately was, but not right away. And on a cyclical basis, we're looking at a few quarters. That's not the trade.
And Lakshman Achuthan, what's so important here is how do corporations adapt? You're basically saying everybody calm down.
Yeah.
What's the history you see at the Economic Cycle Research Institute? All those corporate clients that think you're God, your religion, how do they adapt to this?
Make hay while the sun's shining. I think the wheels aren't coming off right here. I think there is a little pricing power with the sticky inflation such as it is. Take advantage of it as best you can. And you're seeing some of the companies you were just reporting trying to do the best they can there. For the time being, the consumer writ large, that's wealthy households and lower income households, are bearing it. Okay. I am not sugarcoating what's going on with the lower income households. They are under a great deal of stress here, and that's not going away. That'll continue.
Retail sales, we're going to get that today. Still calling for some decent growth in retail sales. I kind of guess that goes to your call on the consumer there.
Yeah, nobody stopped yet. Nobody stopped buying yet. And so you still have jobs growth, even though it's in an easing trend. It's not collapsing. These are all parts. So we have the stag part, right? Things are slowing.
Yep.
Don't have the inflation cycle part.
Right.
No inflation part right here.
So if you're the Federal Reserve, I mean, I guess it's another reason to just sit on your hands, right?
He's going to sit on. Yeah. I mean, look, sit on your hands. He's going to take it because he's the lightning rod for the moment.
Still has a job.
He still has a job. He'll ride it out. Ultimately, the president will appoint someone more dovish. It's his remit to do that. He's going to do that. Really big picture, do you want the administration capturing the Fed? Yeah, probably not. And that's what the market gets freaked out about.
Yep.
So yesterday you see
Yep.
the reaction, and today there's a sigh of relief. I mean, you don't want to be Turkey today. You don't want to be the Fed back in the 20s.
We got to run. I want to get a summary on this. So you have no recession call within all your different cycles.
Not now, no. In fact, there's a few bright spots
You
around
nailed
the
that
world.
like a year ago. You're everybody.
Calm down. Everybody calm down.
Okay, Lakshman Achuthan, thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I was on Fifth Avenue, sort of uptown a little bit, looking down, and there's a Louis Vuitton store. It's like a luggage thing.
Love it. That's so
they
cool
redid it to get an update here in the summer on the state of retail. Dana Telsey joins us, Telsey Advisory Group. Luxury's a little bit weak, Dana. Are the fancy people shopping at Walmart?
There is a trade down, and frankly, thank you, Tom, for having me. Hope your summer's going well. Yes, there has been a trade down that's going on. Look what you've even heard Walmart say, where some of the biggest parts of their growth are coming from their higher income consumers. But you've had two reports. Last week, you've had Brunello Cucinelli, who talked about double-digit sales. Yesterday, you had Richemont.
Yeah.
The jewelry business overall was up 11%, continued the momentum from the prior quarter. And frankly, every region of the world was up 6%. Every channel was up 6% in terms of wholesale, retail, and online. When you look at the regions, Japan was down because of a 59% comparison. You have Asia Pacific basically was flat, even including a 7% drop in China. And you've had the Americas being pretty solid along with Europe. So it's the haves and the have-nots right now.
I agree with that, and I totally buy into it. Lisa was talking to me, Lisa Mateo, and she and I remember back, she doesn't remember. I remember the 1970s, and at Richemont, Cartier comes out with the Love bracelet, the medium model. This is the Love collection. It's an iconic symbol. It's $6,100 on your wrist. That stuff's moving, Dana, isn't it?
It is. That stuff is moving. Iconic heritage means something. It can be sold. I think you're going to see that from Hermes also. But overall, the rate of growth for many of these companies still is slowing from what it had been.
If Lisa Mateo had the Love bracelet from Cartier, are you telling me she'd sell it at the Real?
I think you want to keep it. Why do you ever want to sell the Love bracelet?
Exactly. Dana, talk to us about kind of the other side of the equation, the folks that are maybe struggling a little bit economically. How do we see that in retail sales? Because I had a pretty solid retail sales number just here a couple minutes ago.
I know. I saw the retail sales number too. It is solid. I think overall what you've seen that trade down, whether it's the dollar stores, whether it's the discounters and off price, value is definitely winning. And that lower income consumer, the strength of a labor market allows them the ability to spend, but perhaps the discretionary spend isn't as great. It is spending on essentials where you're seeing prices go up. We have a pricing tracker that we put out every Tuesday, 80 different items, the same 80 items. We've been doing it since the middle of April, and we haven't seen such a big change yet. We saw some footwear changes on the Ons and the Hokas and the Uggs, but you haven't seen a lot yet. And as we move through, we think the higher priced inventory will come in, and then you'll see some changes, but that's still to come.
Dana Telsey, with immense respect to your family's heritage wrapped around Bergdorf Goodman, where is the department store across this nation in 5 years?
Smaller than what it is today.
But it's already
Obviously,
smaller.
It's getting even smaller. And look what you're seeing. You're seeing brands themselves open up their own stores and becoming much more integrated with figuring out who their core customer and community is. There's still going to be a place for relevant department stores, and certainly Bloomingdale's, what we're seeing Nordstrom do, they're having the opportunity to capture more contemporary brands, and they're taking advantage of that right now. So I think it will be smaller, and they'll know their customer better and hopefully be more relevant for some of them than they are today.
Yeah. There's the operative Dana Telsey word.
Exactly.
Hopefully.
Dana, you talk to every major retailer around the world. What are they telling you in terms of their ability to maybe take these tariff costs into their own P&L versus maybe passing along to their consumers? What are you hearing?
I'm hearing about a third. What I'm hearing is that a third of the change is going to be diversifying your sourcing. For example, whether you go from China, whether it's Cambodia, whether it's Vietnam, and knowing that every place is going to have some type of a tariff attached to it. But with one thing they're all saying is you can't come to the U.S. because the prices would go up that much. The second third of it is sharing the cost with the manufacturers. And the third of it, the remainder, is raising prices, which none of them want to do. And that's why I don't think I'm seeing it in my pricing tracker yet. But the level of price increases that we're hearing about is at a mid-single-digit price increase.
Dana, stay with us. We're going to continue with Dana Telsey.
Sure.
Scott Kirby, pilot for United Airlines, coming up after Ms. Telsey. Bloomberg surveillance on your commute across the nation. Bloomberg surveillance on an elevator at Bergdorf Goodman right now. Dana, help me with where the Chinese are shopping. Like Richemont comes out and they're all going to come out. Is it basically the zeitgeist is, China's flat on its back, except they're all shopping in Tokyo and Kuala Lumpur? How does that work?
Well, overall, they may still be shopping, but Japan is slowed because you're going up against the huge comparisons. So they may still be going to Japan, but it's not an additional uptick from what you're seeing there. And also it's the same thing with Europe and the Americas. A lot of them are shopping more within China than they are shopping outside of China. And it's something that's being watched very closely. I think that as we move through the earnings season, I think there'll be more discussions about, well, when does the comparison stabilize so you get to flat? And we're not there yet.
Dana, most of America, Walmart, Target, those types of places, what's the business like there these days?
Feels very solid when you think about Walmart, and Walmart keeps taking share. You're seeing it with new brands. You're seeing it with pricing. You think about what they can do also with online. Look at 60% of Walmart sales are food. So they're a destination for goods and for essentials. And it seems like they're a share gainer, as are the off-pricers. I think Target overall is still working to find its footing, given the miscues that it's had.
Let me hit the blue button, the Detroit Lions blue button. I got to get this in for Lisa Mateo, Dana Telsey. Gingham is so in. What is Saks Fifth Avenue doing with gingham this summer for Lisa Mateo?
I think you're going to see more gingham. It is popular, but you know what the hottest trend is out there
Please.
lately? Have you heard about Labubus?
I held one in my hands last
Lisa
night.
Mateo, all
The
fired up.
monster dolls.
Is Joe Feldman
Yeah.
is Joe Feldman covering Labubus?
No, he's not covering Labubus, but it's basically there's Lafufus, which are the fakes, there's Labubus, which are the reals, and try to get your hands on one. Not so easy, but that is the hottest trend out there lately,
Oh, my
and
God,
it just
Tom.
started in 2019.
I held in my hands last night a gift from Shanghai, China
Yep.
to Afterthought.
Okay.
She was so happy. It's a light blue. It's like a rarer Labubu, and she's worried of wearing it on her bag
Yep.
because it's not the bag will get stolen. Afterthought's doing Prada. Are you kidding me?
No way.
But you know, the Labubu is the issue. Dana Telsey, thank you for that nugget
Absolute
of information.
best. Absolute best.
Great. She is the best. Dana Telsey on the Retail Pulse of America, from Joe Feldman's big boxes over to what luxury is doing here a block away on Fifth Avenue.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is the conversation of the day. On multiple fronts, Francis Donald's work is exquisite at RBC Capital Markets. And now we're going to overlay all of the research abilities of the Royal Bank of Canada. Francis, on tariffs that are 18% bundled down from 20% bundled, that number will change tomorrow, but it's not 3%. You and your company are living this across the border, down to Windsor, across to British Columbia. Are these double-digit new tariffs doable?
Well, we're going to find out, Tom. And
Granted, it's a great experiment.
And what I think is critical is we are in the largest trade shock in 100 years for the United States and the rest of the world. And it is far too early to assess what the impact will be.
When's your win on
the
that?
economy.
Next year? Do we have to wait till next year?
We are late into Q3. And the full impact, the full story, the full study of tariffs, I don't think we're going to feel comfortable saying how meaningful this was on the U.S. economy until late into 2026. Why? Because there's a significant process in play here. There was massive front loading into the economy. Inventories are very, very high. Those inventories need to be depleted before we start seeing imports at those higher tariff levels. Then you have to make an assumption of who's going to end up paying for that. Is it going to be producers or the importers themselves? How much of that cost is going to get passed on to the consumer at the end of the story? So there are two most important macro questions in play right now for an economist is how long does it take for inventories to be depleted? We think about 5 months. It matters greatly which sector you're in, and how much is going to get passed on to the consumer. And if I may, Tom, let me push back. I hear a lot. I don't think consumers are going to take the brunt of this. Producers or businesses are going to absorb the entirety of it. Is that really bullish? Do we really like the story that businesses are going to see all of the tariff impact, that they won't pass it on to the consumer? Because if businesses are taking on that tariff impact, that means margin compression for them, and they're going to have to cut costs in other way. So, Tom, do you know the old school trolley problem? Pick the lane between you go down one track and you're on one track and you hurt one person, or you go down another and you hit 100,000 or whatever. We're in a trolley problem in America right now, which is we're either going to see the costs of tariff passed on to consumers and they'll face higher inflation and prices, or we're going to see that absorbed by businesses and that probably leads to job losses, or we might end up with a little bit of both. And I don't think we're really going to be able to answer that question until well into 2026.
How are the folks in your Canada thinking about tariffs and the trade situation, trade policy with the U.S.?
Well, Canadians are actually thinking a little bit less about trade policy now, which is a huge 180 over where the country was in February when it was the largest victim of American trade policy. Now Canada actually has the lowest average tariff rate of all countries that the United States trades with. So if you're looking for shelter from the trade war storm, Canada, surprisingly, ends up being where you want to be. Of course, still very painful for certain sectors in that country. Steel and aluminum, for example, copper are going to be getting some attention. But right now, the focus is turned towards other issues in play. And it's just an example, I think, of how quickly the tariff story can go from being disastrous to actually being more of a cut on the arm.
You get some economic data today. Model out real GDP forward and nominal GDP as well with the inflation overlay.
So we're looking at real GDP roughly between 1% and 2% by the end of this year. Let's call it 1.5%. And I like to simplify this to, are we growing below 2% or are we growing above 2%? And to my excellent colleague in equity strategy, Lori Calvasino, we talk about this a lot because we have to have a sense. If we're growing above 2%, your economy is accelerating. It tends to be bullish for asset classes. We're not going to get there this year. You've got a moderating consumer, even though we had stronger retail sales today. You got some weight coming through from trades. And then on top of that, you have housing, which is really a lost growth engine in the US. So it's hard to get above that metaphorical or that literal 2% number. And that's always how I think about the US economy is, are you below zero, in which case you're in a recession, or are you at that critical 2% level? And I just can't see it for 2025, unfortunately.
Francis, how about the US labor market here? President Trump and the administration has effectively closed off the southern border. How does that impact the labor market, if at all? I'm not sure.
Oh, it impacts the labor market, especially within the context of what we call the most important American theme that nobody talks about, which is America needs workers, not jobs. It is seeing aggressive and accelerating mass retirements. 2 million Americans are retiring every single year. That's getting bigger. It's distorting a range of figures. We've got 3 retirees for every 1 unemployed new entrant in the US right now. You've got a skills mismatch occurring across this labor market as we have exceptional needs for healthcare. Did you notice that about half of the job gains in the United States right now are going into the healthcare sector? That effectively means that your job market is no longer a helpful cyclical indicator. It's getting buffered by these structural themes. And immigration is going to exacerbate some of these problems.
Are you following the Fed Derby? What is your advice to our listeners and viewers, and particularly your advice, your counsel to global Wall Street on monitoring the Trump-Powell escapade?
Well, here's the advice I give myself when I wake up and see the news headlines, which is remember, focus on the data. And my strong suspicion is that the inflation data will be the make or break on what the Fed does this year, not who's in the position, not who's criticizing the position, but what happens with the American economy. And our sense is that inflation is going to reaccelerate into year end. Those structural factors are going to keep a floor under the labor market, make sure that the unemployment rate stays low, and that's going to make it really hard for anybody in the Federal Reserve to cut rates. So even though, yes, we're seeing some noise, it matters. We're thinking about the value of the institutions, the relationship between monetary policy and fiscal policy, that critical Fed independence. At the end of the day, the Fed outlook, regardless of who's in the position, comes down to the data. And we can say that, Tom, you and me, because we've lived through many Fed cycles. And whoever's in the position, sure, there's a bias. Maybe it changes 25 basis points here or there. But the future of the American economy rests on these broader themes, that size of the deficit, mass retirees, not necessarily who holds up.
Just as an aside, the central bank independence of David Dodge's Central Bank of Canada is more independent than the history of the Bank of England, isn't it? I would suggest the Commonwealth had a more independent central bank over decades than the mother country.
Well, that's an interesting takeaway. And the other one is that most of these central banks you're referencing have solely one mandate, which is inflation targeting. And as a result, it's easier for them to navigate.
So do we have a new third mandate called Donald Trump?
Well, it makes it more complicated for a Federal Reserve that's going to be balancing a dual mandate and political pressure and financial stability risks. I would rather be a Bank of Canada or Bank of England central banker right now than a Federal Reserve member.
U.S. consumers hanging in there. We saw some retail sales today there. I mean, it's just, I think it's just amazing how strong, relatively speaking, the U.S. consumer is today, given some of the uncertainties out there in the marketplace. It just doesn't feel like it's playing out in the daily behavior of U.S. consumers.
Do you know the first thing you learn when you become a U.S. economist? Day one on the job, they bring you on the desk, they set you up with your Bloomberg terminal, and then they say, first rule, Never bet against the U.S. consumer.
Yeah.
This is the
Good
first
point.
rule
Good point.
of U.S. economic
So
Fight
what
Club.
is the state of the U.S. consumer? Is it's partitioned into two Americas?
That's right. So we refer to the U.S. economy right now as not one economy, but two economies, two Americas, and the evolution of what we call the K-shaped economy. When I look at this consumer, we have to be really cautious not extrapolating high numbers for retail sales, both because the cycle is distorted by these tariffs, but also because we know that they're being disproportionately supported by high-income households. And so if you're trying to forecast the American economy right now, you have to spend a lot more time thinking about that top 10% than the other 90%. But if you're a business and your end clients are not the top 10%, if you're a policymaker and you want to make the lives of Americans better, you have to be cautious about over-interpreting these strong consumer numbers as being representative of the whole.
So if you're the Federal Reserve, you see these strong retail sales numbers. You see moderate inflation. Yeah, maybe it's kicking up a little bit in some parts of the economy. Growth is slowing, but there's still growth. What? I mean, the Fed, just stay on the beach and not do anything. Stay on the golf course, not do anything, right?
Well, the RBC call in conjunction with our head of U.S. rates, Blake Gwynn, is that the Fed can't really do much until December. They won't have
Until when?
Until December.
December,
the first
okay,
cut.
okay.
And that's just effectively a time to gate issue. We don't have enough deterioration in either the inflation data or the jobs number to give enough of a mandate. But it's clear to us as a team right now that this is a Fed that wants to get back to a more neutral level of rates, and there's a bias towards as soon as the data allows some permissions to move in that direction, and that's why the cut bias is still in our outlook.
I got 1 minute. Where's CapEx? I mean, the AI thing, Brookings out with a huge report today. Where's CapEx according to the Royal Bank of Canada?
Another structural trend that we should not be downplaying, and making sure that we continue to disaggregate between the structural and the cyclical. But this is one more example of that structural trend of AI development and CapEx keeping a floor under how low growth can get. With a 7% deficit to GDP from the government, a ultra wealthy, doing very well top consumer, and then the CapEx AI story, it's really difficult to get a decline.
Right.
So we are watching, of course, AI really closely. But one thing I got to say, Tom, is there are limitations on this. Watch the electrical grid. We think about that more than we ever have before in U.S. economics. How much expansion is there?
I mean, Texas sort of needs an Ontario Quebec Hydro. Dan Fuss up at Loomis Sales, like it was a majority shareholder at one point.
Well,
you got a well-run grid up there, right?
The world needs Quebec and Ontario type electricity. It's some of the most renewable, reliable, and cheap in the world. And you may not know this, Tom, but there's currently a plan to build out the electrical so that in Manhattan itself, 20% of the electricity going to be fueled by Quebec, called the Champlain Project. So when you turn on your lights or turn them off or bring your AC on, I want you 20% of the time to think of me.
Is that why there's all the construction on 59th Street? You can't even get down the damn streets because of Quebec Hydro?
Quebec Hydro.
Quebec Hydro. Something
awesome.
to pay attention to on a go
now I
forward
gotta
for
Google
sure.
Very
Quebec
good.
Hydro.
Francis,
That's
thank you so much. Francis Donald with RBC.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The newspaper's Lisa Mateo. A highlight of the day, she looks at 42 different newspapers. Do you really read Le Monde in French?
She does.
And,
I see it every
of
morning.
course.
Of course.
Merci. No, that
Merci.
means thank you.
Mercy. Okay. What do you got today?
Okay. You've heard of diamonds are a girl's best friend, right?
Yep.
No.
Well, it looks like lab-grown diamonds are
I am
actually
all
a
in on
girl's
this.
best friend. They look the same. Apparently, they're just as strong.
Exactly the same.
Yeah, but a fraction of the price.
Yes,
and
I
that
know.
is the difference. And that's the problem. We had the CEO of De Beers talking with the Wall Street Journal.
See,
He's fired up. He's calling it a con.
I need a survey to say, just give me
Wait.
100 women saying, if your boyfriend
Yes.
were to offer you a
ring, engagement ring.
yeah,
right?
but
Is there
the- but
something
the-
you'd like to tell us?
I'm just wondering, would women accept the lab-grown diamond versus the
I
real
would.
diamond? You
Okay.
would.
Are you going to take a carat and a half lab grown over some Joy from De Beers for 0.75 carats?
I would save the money and put it towards somewhere else.
Oh, you're
That's
so
what I would do.
practical.
And
Okay,
if
so I
my
wanna
son
see
were to
that
propose
survey,
to his
though.
girlfriend,
I wanna
I
see
would
that
tell
I
him.
mean, it's shattered
Go
the
for
diamond
lab
business.
grown.
The Wall Street
It
Journal
is.
article
And
shattered the business.
and that's what it's saying. It's, you have Signet Jewelers, right? They partner with De Beers. They did this marketing campaign. But if you look at Signet, even they're starting to add
Okay.
these lab-grown
That's what I hear.
things
I
into
hear
their
it's very
into their
popular.
collection.
Mrs. Keene just emailed
Yes.
in 2 carats. Next.
2 carats. Okay, have you seen a movie in IMAX? Have you had
Yes.
that experience?
Awesome.
It's
Awesome.
good, right? The big screen, you get the whole theater.
The sound, the whole
The
thing.
business behind it, okay, so it licenses technology to theaters, right? It generates more than 10% of box office blockbusters, and it attracts major filmmakers because they use their technology. So who doesn't like it are actually the movie theater chains.
Yep.
Some of the largest U.S. theater chains, you have Cinemark, Regal, Marcus, right? They're starting to tell, what sources are telling Bloomberg is that they're holding these talks about doing a joint marketing of their big screen theaters. Because if you go to Cinemark, for example, by my house, we go to Cinemark, they have their big screens. They
Yep.
call them XD, right? That's
Yep.
their
Yep.
IMAX,
Yep.
you know? Regal has RPX. They don't use the IMAX technology. They're not as big as IMAX, but the chains are starting to say, you know what, maybe we should unite around a one brand
You
and
ready?
do it together. Yeah.
You two are too young for this. Cinerama, which was a failure the first day it came out, you could see the seams, the vertical seams on the movie screen where they were trying to widen the image or whatever.
Okay.
I mean, Paul, do people really want to pay up for IMAX?
They
versus...
do. They absolutely do. They,
Yep.
and, for the big, big blockbuster kind of movies, just, that kind of thing.
One more, Lisa.
Okay, so these are for all the space junkies out there. A
Junkie.
massive rock from Mars, it landed on Earth, just sold for a record, okay? So the backstory is it broke off from Mars when an asteroid struck the planet, right? It's 54 pounds, about 14 inches long. It traveled to Earth. It landed in a desert in Northwest Africa, and some meteorite hunter found it back in 2030.
How do they know
Here,
it's
I
from
saw
Mars?
this. That's
But
what
now,
I said.
because they test it, and they take a sample of it, and they test it, and it has the same
man.
substances that the
Matt,
planet Mars
Matt
has.
Damon doesn't have an angle on
No,
this.
he does not.
He didn't sign off on this.
But it did sell. Sotheby's had an auction,
Wow.
okay? $5.3 million.
Nice.
This is a record. I mean, it's
So it's
the
like
largest
Shogun.
piece of
Somebody
Mars.
puts the hunk
Yeah.
of Mars in their rock garden. Like,
Fine.
I-
I mean, all right.
know
I mean, I
Shogun.
don't know how you figure it out, but all right, go for it.
And it's the
there's a
highest
market for
selling
everything, as Lisa
meteorite.
tells me.
So-
we've generated a heated response. Thank you across this nation and worldwide for listening. Nobody cares about Glenn Hubbard or Steve Lapley was brilliant on ETFs and fixed income. Sarah in the control room goes, yeah, I'd go for the lab grown. We got huge response to the lab grown.
Sarah's the player.
I know.
She's a
I said
player.
I would tell my son for his girlfriend, stick with the lab grown, save yourself some money,
Wow.
put it down
Wow.
toward a down payment for a house or something.
Interesting. I took some of my Merrill Lynch investment banking bonus for my brand.
Right. Okay, Lisa
That's how it
Mateo,
works.
the newspapers, thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.